right, what up, what up, what up? I didn't even realize we ain't even got the disclaimer on here. We don't even have the disclaimer on here. So we're just gonna rock with it. I know it's been a while since I've been live. I just want to tap in, see what's going on with y'all, see what's popping. I need to figure out a way to get the recording popping, but a little makeshift today. Just want to do a trading recap. What's up? What's up? Yo, soy Teddy. What's going on? Talk Ticks. Thanks for coming through. Thanks for coming through. So just a quick little recap today on the trading of SPY. Go ahead and get myself some likes in this mug. I don't care. Sometimes you got to gas yourself up. But I need to actually have my disclaimer on here. So I need to go back and grab my disclaimer. But thank y'all for rocking with your boys. So we're just doing a trading recap. Now, today's trade was SPY. I did announce it to the Discord. So let me go ahead and show y'all that. It was a super fast scalp. Pretty much less than a minute, which was super dope. The thing about scalping, I will say, is it does make you very impatient when you get into longer trades or swing trades. But here was today, 6:36 a.m. So just a few minutes after the market opened, I said that I was getting into the SPY calls. And so within 1 minute, SPY hit my profit target and I went ahead and took profits and I let the Discord know. But what I do want to show y'all is what exactly I was looking for and how I've been trading SPY lately. 805, what's going on? Mr. Dan, Jeff, M713N832, Mike, Armand, Job, Arturo, what's going on? All right, so on the trade recap for today, thank y'all for coming through and rocking with me. The first thing that I did is y'all see with these white lines is I marked out the high and low of the pre-market before the market opened. So lately what I've been doing and the way that I've been trading is via opening range breakout. It was something that my kind of like mentor put me onto. I wasn't really paying too much attention to opening ranges and I got away from looking at the pre-market activity. But this has been a very simple way to trade lately. So basically I plotted out the pre-market low, of course, the pre-market high up there. And then this blue line represents where the market opened. I hate when Trading View kind of zooms in and zooms out like that, but I'm on the browser version. So I do this on the 30-minute time frame. We got that pre-market high, the pre-market low. Yo, thank y'all for the likes. Yo, Bryce, thank you for following. Just thank you for following. So if you're rocking with me and you're seeing what I'm doing so far, just give me a thumbs up or drop a 1 in the chat. The first thing I do every day, whether I'm looking at SPY or I'm looking at QQQ or whatever ticker symbol, is on the 30-minute chart, I mark down the pre-market low and the pre-market high. And then this blue line is where the market opened up. I mark that out on the 30-minute chart. Now, depending on how the market is moving with the price action, I will go ahead and look and break down to the 7-minute chart, which is what we have right here. So looking at the 7-minute chart, and it actually starts kind of in this pre-market area, this candle right here. It closed above where the market opened and right at the pre-market high. So I took that as an indication to go ahead and scalp some SPY calls. And so literally I got in right at the start of this red candle, which in hindsight was a little bit dangerous, right? But we went ahead and scalped and I took this ride up on the top of this wick, the top of this candle here, got my profit target, then I got out. If I was a bit more patient and depending on where my stop was and my risk tolerance, could have held on, waited for a little bit of this volatility to die down, and then just catch SPY blasting off for the rest of the day. But that's essentially what I've been trading all this week, basically the opening range breakout, and it's been working out for me. I know this is a little bright, but you guys can see I've just been trading that each day. Very simple, same thing over and over. Just getting my profit targets. I usually go for about 5% each day. And so something like that. And my average trade is about 900 to 1,000. But I've been doing the same thing every single day. Of course, there's some days where the strategy doesn't work, take a loss, but I just keep it moving. One thing I've had to realize, I know it's been a long time since I've been live, but good trading really is bad trading. All right, let me take a look at the comments. Let's see what's going on here. Make sure. Bryce says, hey, boss, what computer is that? So this is just an iPad. I usually am on my computer, but I'm away from home right now. So this is literally just my iPad that I'm showing you guys right now. And then I have that iPad case that has a keyboard that automatically connects to it. So just to let you know, Bryce, it's an iPad Pro. I forgot which generation this is, but I got it about 2 years ago. All right, who we got next? Forex EA Trading left the money sign emoji. All right, Captain Crunch 215 says, why use the 7 minute? And that's a good question. So the direct answer on why to use the 7 minute, it was my mentor who basically put me onto it. And a deeper answer is, and this might sound a little cheesy, but I really do believe that at the top level, the market makers and the big players are looking for what areas are the easiest to manipulate people. And most people, right, they're trading on the most popular time frames, right? Your 30-minute, your 15-minute, your 1 hour. And so using some of these kind of one-off time frames that, of course, people use them, but they're just not as popular as some of the standards. So like a 3-minute or a 7-minute. And so you kind of, in my own opinion, you kind of move and you're like navigating in between where most of the market makers are looking to kind of catch people slipping, right? Because we know at the top of every hour or at the half hour, the market makers are going to do some strong moves. At least in my opinion, they will. All right, Tati says, and Captain Crunch, I hope that answers your question on why I'm using the 7-minute. All right, Bryce says, okay, nice. How does that work for trading? Is it doable or do you recommend? Not really. And I'm not knocking the iPad at all. I just use my iPad when I'm traveling. And so I'm not at home where I have my normal setup on my computer. But when I'm traveling and I want to trade, then I'm just on my iPad and then I'm using my phone. Those are the two things. But when I'm at home, of course, I have my own trading setup. It's nothing fancy. It's just my iMac computer. That's about it. But of course, I have more customization with my screen and everything like that. All right, Captain Crunch, I hope you're still in here, but I hope that answers your question on why I use the 7-minute. And Tati, give me a thumbs up or give me a one in the chat if you're still in here. Yo, Jay, thank you for the follow. Thank you again for the follow. Bryce, Iki, thank you for the follow. And then Tati, if you're still in here, or it really doesn't matter, but I just want to make sure that I'm speaking to you, Tati, because you're asking the strategy. So if you just joined the live, I've just been going over the trading strategy that I've been using for the past few weeks. It's very simple. It really is just an opening range breakout with a couple of other little factors that I look for. So basically, starting off on the 30-minute chart, this one on the top, what I do every morning, and you can do this with SPY, you can do this with QQQ, you can do this with Amazon. As you guys can see here, I did it with QQQ. Let's let it refresh. And I did it with Amazon as well. You could let it refresh. But basically, it's just the opening range breakout trading strategy. And by far, this has been the most simple and easiest one for me to understand and to stick to consistently. So if you're just now joining, basically all you're going to do, and you can use any time frame that works for you. The 30-minute and the 7-minute are the ones that work best for me. So I start off on the 30-minute every day, every single morning. And then all I do is I mark out the pre-market low, the pre-market high, and then when the market does open with that blue line, with this blue line here, I mark where did the market open at. Then normally what you really want to do, especially if you are a beginner trader, what you really want to do, yo, Damien, thank you for the follow. Appreciate that. What you really want to do is wait for the 30-minute mark to end, for the first 30 minutes of the market to pass, because as we all know, the first 30 minutes of the market being open is pretty volatile. You can see that with these wicks down here on these first two candles, right? Price was shooting up and dropping back down. Price was shooting up and dropping back down. And so if you are a new trader and you're just now starting to use this opening range breakout strategy, it is highly recommended that you wait at least for the first 30 minutes of the market to be open and to close before getting into the trade. Now, if you have a little bit of experience as a trader already, you know your risk management, you know yourself, you know to stick to your stops, then you don't necessarily have to wait for the 30 minutes to end. But that's always where I start. I start off with a 30-minute time frame. And then what you're looking for is to see where does price close at your trading levels or your trading time frames. So I'm going to dip back, and this is where the 7-minute comes in for me. So we got the 30-minute on top, but then down here, we've got the 7-minute. Now, I know this is going to look a little funky, but y'all just rock with me. So right here, we have this first 7-minute candle. This is essentially where the market really opened up at. And what happened was price closed. Let me zoom in so we can see it better. On this first 7-minute candle, price closed above the open. And because price closed above the open, you can, and this is not a wide PT or price or profit target, but right when it closed, I got in. And what you would normally do is you would target the pre-market high for your profit target. But because it was so close, typically when you see these being very close, then it does kind of indicate, it's no guarantee, but it does kind of indicate that there's going to be a strong bullish movement either for the day or at least for the first part of the trading day. And what we saw was an overall bullish day. And so with this first 7-minute candle closing above the open and it being very close to the pre-market high, I took that as a sign to go ahead and scalp some calls. I got into calls, hit my profit target, which is right at the top of this one, and I got out. If I had more patience or if I had higher risk tolerance, we could have stayed in for the rest of the day and really seriously made some bank. But I'm all about hitting those base hits. I don't need a grand slam. I don't need a home run every day. I just need to get my base hit, let those compound up, and then go from there. Any questions on that? Any questions for anybody that just joined, if that makes sense? And the same thing down here, right? If price had closed on that 7-minute or 30-minute below the pre-market low, I would have looked to take puts. I know we got a few people that come through. We got 17 people rocking with us. If you need me to repeat or start from the beginning, please let me know. I definitely don't mind that. I'm tripping. The market is still open. I'm feeling like the day is done. I done already took care of my trading so far in the day. I thought the market was already closed, but we still got 5 minutes. But if you're rocking with me, it looks like we got 16 people. Drop me a 1 in the chat if you want me to start over. Bryce, thank you for coming through. Tati, Boo, Yo, Relly, Damian, Malik, Slappy Hour, DDS 7306, JC Juzman, King, David Roy Gomez, and Zane. Thank y'all all for rocking with me. But let me know, just drop a 1 in the chat if you want me to go over the strategy again from the top. But the long and short of it is a opening range breakout strategy, starting off with a 30-minute time frame. And essentially all we're looking for, especially if you're a beginner trader, you want to wait for the first 30 minutes of the market to open. And if the candle, which is this one up here on the 30-minute chart, if that candle closes above the pre-market high, or if it closes above where market opened at, then it's an indication for you to take calls. That's the long and short of it. Of course, you can use other indicators, whether you like to use VWAP or an EMA or a longer time frame. You're more than welcome to do that. Other indicators, whether you like to use VWAP or an EMA or a longer time frame, you're more than welcome to do that to incorporate it. But the meat and potatoes, or maybe the structure, it's just marking out, charting out the pre-market highs, the pre-market lows, and then waiting to see if the market or price closes above or below those levels. And then Maze YP says, all this thinking, why not just use autopilot to buy whatever Nancy Pelosi buys? She was up 45%. Definitely on the long term. I've been hearing some good people have made some good gains following the Nancy Pelosi stocks for sure. For real. Not knocking that at all. All right, Raj, thank you for the follow. Appreciate it. The Real Queen Dree, thank you. I see you. Thank you for coming through. If you're just joining and you want me to recap the trading strategy, please let me know. I don't mind. Long story short is I use the opening range breakout strategy on the 30-minute and 7-minute charts. And I'm ultimately just looking for a price to close above or below the pre-market high to kind of determine or tell me if I want to take puts or if I want to take calls. And so one indication, and this doesn't happen 100% of the time. As we all know, there's no strategy that works 100% of the time. But what I have seen is when price, and this indicated by this blue line here, when the market opens, I mark it with a blue line. That's where the market opened up. That's where price was at. Typically, when we see price opening very close to a pre-market high or a pre-market low, it is a slight indication that that's how the day is going to go. So if price was to open close to this pre-market low, it would have been a slight indication that we would have been having a bearish day. What we saw today, though, was price open right next to the pre-market high. And then ultimately, we've had this very bullish day. Oh, maybe very bullish is not the right word to use, but overall bullish. All right. Tati says, what's the win rate on your strategy? So the back-tested win rate. All right. So my back-tested win rate is 75%. But I will tell you, and I'll be completely honest with you, Tati, my win rate is lower than that. And a lot of that has to do with my lack of discipline, either chasing a trade and getting in too late or being shook out of a trade, right? one part of the strategy is waiting for candles to close. And so sometimes to minimize my losses, I won't wait for a candle to close. I'll get out prematurely. So looking at it purely from a binary black and white standpoint, when you go back and you back test this using the 30-minute time frame, it has a 75% win rate, but my win rate is lower than that. And that's mainly because of letting my emotions take over when I'm in a trade. All right. Malik wants to know, how long were you in the trade? In this one today, it was literally 1 minute. I literally was out in 1 minute. As you can see here, 6:36. And then let me close this. I took profits at 6:37. You can see that was the confirmation there that it sold and I got out. And like I said, I'm not looking for home runs. I'm not looking for grand slams. I'm ultimately just getting base hits and letting them compound. So for the most part, my profit target is 5 to 10%. 5 to 10%. And my average trade, as you guys can see, is about 1,000 or less. So usually I'm aiming for, something like 50 to about $100 each time I trade in terms of profit. So very, very, nothing crazy, nothing like over the top where you're going to be looking for 1,000% bangers or 500% bangers. And I'm not knocking the people that shoot for those trades. It's just that for my peace of mind and for me to develop consistency and discipline, I've realized that just trading in this way allows me to compound my account a lot better, as opposed to me going for like some crazy shots and then I'm taking huge blows to my capital. Tati asks, do you only use this strategy? I'll be real, Tati, as of the last month, yes, I've only been trading this strategy. Now I have another one that I kind of saw on my own or found on my own, which is a bullish engulfing strategy. And so I back tested the bullish engulfing. I wonder if I have the back test on my iPad. Like I said, y'all, I am do I have it? I don't know if it's on here. I might not have it on here. I'll have to double check. Like a previous day high, there is a 75% chance that the very next candle will be a bullish candle. And so what I do is I'll wait for somewhat of a pullback, which we see kind of here what most candles have, right? Most candles have a downside wick or upside wick. So I'd wait for somewhat of a pullback. And then realistically, I would get in around here somewhere and then let that ride up. And so that's the overall part of that strategy that I use. But I want to see if we could find it. I haven't traded it in a while because I've been doing this opening range breakout. But look right here. Perfect example. And I didn't even cherry pick this. Now, fair warning on this particular strategy, right? My definition of a bullish engulfing, this is my definition, not the standard or formal definition, is did the price of the body of this candle move further or wider than the price of the body of this red candle? This is the key part of that strategy that it needs to have. I need to see a red bearish candle, and then the bullish engulfing, the price needs to move candle. This is the key part of that strategy that it needs to have. I need to see a red bearish candle, and then the bullish engulfing, the price needs to move signal. We would enter on this candle, and then you can ride it up, to wherever you think your profit target is going to be or for however long. So that's another strategy. I haven't used it in a while, but it's one of my favorites. And it's really my favorite because I kind of stumbled upon it on my own. I'm not saying I'm the one who created it. I'm not saying I'm the only one who ever saw it, but it was something that wasn't taught to me. I kind of saw the pattern with my own eyes when I was just learning to trade. And so, like I said, I'll just recap. Bullish engulfing that happens above the previous day high, and this candle moves farther than this red one. Now, of course, we all know that's what engulfing is, but I just want to make a point of clarity here that the true definition of a bullish engulfing says that the opening price for this bullish candle is below this one, right? And the closing price, of course, is above because it engulfs that candle. That's not my definition. My definition is as long as the price range moved further, wider than this one. So technically, with my definition, the price of this opening candle on this bullish one could have opened above this right here. It could have opened in this area, but as long as it moved further than this one did, I consider that to be an engulfing. Yo, Aaron Davis 524, thanks for the follow. Tati, hope that answers your question. That's one of my favorite ones there. I wonder if I can find it for y'all. I thought I had it on this iPad. Let's see. Okay, now this thing is tripping out. Here we go. Is it? No, it's not that one. Do I have it on here? No, it's got to be on here somewhere. Let's see. Is it this one? No, it's not this one. It might not be on here. Dang it, I thought I had it in the cloud on my Excel. But yeah, so Tati, I hope that answers your question. Looks like we got 35 people rocking with us. So drop a 1 in the chat if you want me to restart or go over those strategies, or we could keep going and look at some other tickers. Like I said, so those are the two main strategies. Lately, I've been doing the opening range breakout, but my other one is that bullish engulfing that occurs above the previous day high. All right. Lucky or Lucci, thank you for the follow. Tati says, how long have you been trading and how long did it take to become profitable? So I'll answer that question two ways, and I want to be as transparent as possible. My very first options trade was June of 2020. That was the very first time I did an options trade. I didn't take trading seriously until 2023, until January 2023. So June of 2020, all of 2021, and all of 2022, I kind of like just bullshitted with it. I didn't really take it seriously, but I lost a whole lot of money, a whole lot of money. Then it wasn't until January of 2023 where I really got serious about trading, and that's where I saw improvements in profitability. But that included things like getting a mentor. That included creating a trading journal. I didn't really have a trading journal before 2023. So I hope that answers your question. So 2020, 2021, 2022, I just BS'd around. Of course, I learned some hard lessons, but I really didn't internalize them. January 2023, I said, yo, I really need to, get on it. I want to take this seriously. And then here we are here now. Doug Metzger says, do you use fair value gaps? Not intentionally. If I recognize one when I'm looking to get into a trade, or if it's there, then I'll take it into consideration for how I expect price to move. But it isn't overall a part of the way that I trade. It's not a part of my setups, if that makes sense. I hope that answers your question, Doug. All right, DP, thanks for coming through. So if you're just now joining, and if anybody wants me to recap the two strategies that I talked about, which is the opening range breakout or the bullish engulfing for the previous day high, just let me know. But those are my two favorites right now that I really, really like. And like I said, I've been exclusively trading opening range breakout for at least the past month. Yo, Eddie Albany, thanks for coming through. Tony, what's going on? What's up? So Arnav dropped a 1. So really quick, if you're just now joining, thank y'all for the likes. If you're just now joining and you're just now popping in with me, the two strategies that I use are opening range breakout and bullish engulfing. Now, like I said, for the past month, I've been pretty much exclusively trading the opening range breakout. And so on the 30-minute chart, that's what I start with. That's what I trade. You can use it on any time frame that makes you comfortable, the 1 hour or whatever the case may be, the 4 hour. But ideally, I like to use the 30-minute, but you find what time frame works for you. So during the pre-market on the orange shaded area, not the after hours from the day before, but just the orange shaded area, the first thing I do is I mark out the pre-market low, and then I mark out the pre-market high. That's what we see here with these white lines. Once I do that, the next thing I do is once the market opens, I mark out where did the market open up at? Where was price at when the market opened, which we see by this blue line. Now, if you're a beginner trader or you're kind of struggling, the number one thing that you want to do is wait for the 30-minute candle to close before entering into your trade. Now, if you have a little bit of experience with trading, and more specifically, you are disciplined and you know to stick with your stops and you know your risk management, what I do then is I will go down. We've got the 30-minute charted out. I will go down and look at the 7-minute chart. I look at the 7-minute chart, and based off the 7-minute chart, and this is what happened with today, price closed above where it opened and right at the pre-market high. And so I took that as just a quick little signal for me to scalp some calls. So I got in literally right here. Let me kind of zoom in. This is the 7-minute chart on the bottom here. And then right at this little pop here, let me kind of zoom in. This is the 7-minute chart on the bottom here. And then right at this little pop-up is where I got in and out really, really quickly. Now, like I said before, if I had more risk tolerance, or if I was looking to gain some more profits, or if I just had more patience, we could have went through this volatility and then just rode it out for the rest of the day. But it's the same thing. And so typically what you really would have wanted to do, and I want you to kind of take note of this, is when you see on the opening range, the pre-market highs or the pre-market lows, typically, as we all know, nothing is 100% of the time, but typically, if you see that the price opened up very close to the pre-market high or the pre-market low, it is an indication, just one indication. You can use other signals if you need, or indicators, but it is an indication that the overall day will be bullish. We saw price opened up very close to the pre-market high. We had a bullish day. And then on the flip side, if price had opened up very close to the pre-market low, it would be an indication, no guarantee, but an indication that we were going to have a bearish day. And so those things in conjunction and in consideration are what led me to want to go ahead and scalp those calls. But like I said, if you are a new trader or you're kind of struggling, wait for that 30-minute to close and then just play it on the 30-minute time frame, and boom. So one of the things that really does trip us up, myself included, is the price action and how the volatility may shake us out. So imagine if you got in when this candle closed on the 30-minute, right when this one opened up, you would have had to have been patient, or if I'm still here, the Wi-Fi said it cut out, but basically you would have had to have risk tolerance to go through this pullback right here. But one thing my mentor taught me, and that we want to keep in mind, is not where the candle goes, is where it closes. And so this was a bit tricky for me because I understand that logic, right? You want to wait for the candle to close, but you also have to be mindful of what your risk tolerance is. Now, one of the things that I've done to add to this opening range strategy is sometimes what I'll do is just wait for the candle to pull back a little bit. We already got our indication because it closed above the opening and above the pre-market high that we're going to have some bullish sentiment, but you may just want to wait for it to do its manipulation, right? You want to wait for that a little bit, do a little bit of a pullback, and then once that bottom wick starts to form, you could wait to enter there, and then it gives you some breathing room if you don't want to have to stomach so much of that risk tolerance. All right, let me see. Jaspreet says, what do you think about SPY put for tomorrow? I'm going to keep it real, Jaspreet. Thank you for the follow. I try not to think at all or have any biases or any predictions, especially because I'm more so of a scalper. And the scalper is, by my definition, anybody who looks to get in and out of a trade in less than 60 minutes. So I'm not even trying to guess or think about or analyze if it's going to be puts or calls or bearish or bullish tomorrow. I'm going to let the pre-market high and the pre-market lows determine that for me, especially with where price opens. So I know that kind of seems like I just skirted around the answer, but that's my whole mentality and my whole thought process on it. All right, I got to jump off really quick. I had a slight little, what's the name come up? But Doug Metzger says, what time frames do you use? So me primarily, I use the 30-minute time frame and the 7-minute time frame, these two here. But you can use whatever time frames work best for you. The 1 hour, the 4 hour, the whatever, the 3-minute, whatever you like to trade. If you're more of a day trader as opposed to a scalper, whatever the case may be, you can use whatever time frames are more suitable for you. It's just me primarily. I'm jumping in between. I'm using the 30-minute to do my initial pre-market high and pre-market low charting. but sometimes I'll lean on the 7-minute to just get in and out really quick. And that's what I saw today. The 7-minute candle closed above where price opened up at, this blue line. Went ahead, got in and got out very fast, and that was that. All right. User 123 says, do you just trade SPY? I'm going to be real. Yes. I never thought I would become that type of trader that only trades like one or two ticker symbols. You know, usually I would be scanning through. I have a whole watch list over here of all these ticker symbols that, you know, I would be looking for plays when I was using different strategies. But right now, I only trade SPY, QQQ, and then if the contracts and the pricing is looking right, I might go take a look at Amazon and Google. But literally 90% of the time over this past month, I've only done SPY and Qs. That's it. SPY and Qs. And I'm very surprised. I never thought I would become that type of trader that only traded one or two ticker symbols. All right. All right. So I'm going to hop off, y'all. I'll be right back. I appreciate y'all for rocking with me. I'm getting back and doing my lives, but everybody who came through and showed me love, I appreciate y'all. All right. Peace.